all the divergences that we were monitoring have been rectified, starting with the HYG to IEF, that's the iShares High Yield Corporate Bond, to the iShares 7 to 10 year Treasury Bond ETF. So the MACD is now pointed up where it was pointed down before, and the HYG to IEF ratio actually took another leg up, and then the KST is also pointed up now where it was pointed down, so that divergence has been rectified. The All-Country World Index, ACWI, is still well above its 21-day EMA signal line in blue here, pointed straight up. However, Martin Pring's AD line for the global index, the Pring Global AD, is pointed down, so there's still a major divergence between the All-Country World Index itself and its AD line. The S&P 500 line chart is pointed straight up, and now the S&P 500 AD line has an upwards trajectory, so that divergence has been rectified. You can see the MACD line is now in an upwards trajectory also, and the 14 RSI and the on-balance volume, all of those were pointed down last time we looked, and the S&P 500 line chart was pointed up, so that one's been rectified. And the NYA price to the breadth oscillators below has been rectified also. You can see price with an upwards trajectory. Then the ratio adjusted McClellan volume oscillator in dashed red is pointed up, and the stocks only volume AD line is now pointed up, and the AD line itself for the NYSE is pointed up, and the stocks only AD line has an upwards trajectory, and the ratio adjusted McClellan breadth oscillator for the NYSE is pointed up also. So that divergence has been rectified. And now the big daddy divergence of them all that trumps everything we just looked at is the NYA to SPX ratio, the New York AD line, the ratio adjusted McClellan breadth oscillator for the NYA, and NYA price. You can see NYA price with an upwards trajectory here, the McClellan breadth oscillator downwards trajectory, NYAD downwards trajectory, and the NYA to SPX ratio downwards trajectory. And the Kaplan cheating V is slowly making its way off the page, but we'll take another look at it. The divergence was present back then too. You can see price with an upwards trajectory, NYMO downwards trajectory, NYAD slight downwards trajectory, and the NYA to SPX ratio downwards trajectory, and all of them look almost the same trajectories as the ones we're looking at for today in red over here. And this was back when Kaplan and Rosengren, the Fed governors and voting members of the FOMC, were cheating to skew things into their favor back then, as things were looking like they were in trouble. And the shock hasn't really set in from the FOMC meeting today, where they just about promised 2 more rate hikes of 25 points or so for the rest of this year. So by the end of 2023, we're going to get 50 basis points of hikes as the summary of economic projections was lifted on the median level, so 5.63 I think is now the Fed funds rate for the end of the year of 2023. So I think we're in for a little bit of trouble. You can see back here that it finally meant something here, and we had a pretty good downdraft between August and September of 2021, and then it climbed to a new high and then really sank after that. And this new high in NYA price is illegitimate, as Kaplan and Rosengren were cheating. And price in the aftermarket hours for the S&P 500 at 9:01 p.m. on the 14th Central Time is 43.6570 for the S&P 500, and all four major indexes are headed down. And this divergence here in the current day in dashed red has a legitimate chance at rectifying itself. All that needs to happen is to have the AD line get pushed up into an upwards trajectory, and that negates the entire divergence.